The IRS penalty rate just hit 7% higher than most savings accounts. Even if you made every tax payment this year, you could still get slapped with this underpayment penalty. Today, I'm going to show you the simple year-end check that can protect your money before December 31st. So here's the thing. The IRS doesn't expect you just to pay your taxes. They expect you to pay as you go. So who does this actually affect the most? Let's break it down. This shows up the most with people receiving stock options, K-1s, or business owners, W-2 income earners with big bonuses or side incomes, married couples who didn't coordinate on their withholdings. This applies to everyone, whether you're a W-2 or self-employed. We see this all the time when high-income earners come to us and they're shocked that they owe thousands, not just in taxes, but in penalties. And it's simply because no one helped them adjust their withholdings or calculate their quarterly estimated tax payments. If you're getting 1099 income, running an LLC, or receiving a K-1, congratulations, you're a business owner whether you call yourself one or not, and the IRS expects you to pay like one. So what's the fix that you can do before the end of the year? It all comes down to your last quarterly tax payment. This is where the Q4 estimated tax catch-up comes into play. Now here's where a lot of people get tripped up on timing. If you're trying to fix your estimated tax payments or the penalty calculation, with withholdings, you need to change that before the end of the year. Unlike estimated tax payments, withholdings are treated as if they were paid evenly throughout the year. So it can reduce exposure to penalties for earlier quarters, which is why you might want to make that adjustment. The IRS will charge underpayment penalties, but there is a safe harbor option. For high-income earners, if you pay 110% of what you owed last year, the IRS won't hit you with a penalty. But here's the problem. The safe harbor rule is protection, not optimization. You might avoid the slap on the wrist, but if you end up owing less, you're giving the IRS an interest-free loan. Proactive planning means adjusting to this year's income so you can keep more of your income in your pocket during the year instead of having to wait months after April to get your refund. Here's a common misconception. A lot of people think quarterly tax payments are optional. Technically, yes, you're not required to send them in every single quarter, but if you don't and you're underpaid for the year, the IRS will charge you underpayment penalties. On a $50,000 payment, that's $3,500 on top of what you already owe to the government. Now, if you're off by a few days or your check clears a little late, it usually doesn't matter. But if you don't make the payments at all or are way underpaid, those penalties can add up quickly. What most people don't realize is that the IRS has upgraded quietly. They had 63 outdated systems that didn't talk to each other. But now with AI, they're all connected. Even with fewer staff, they can instantly match your W-2s, K-1s, 1099s. So now underpayment penalties are catching high-income earners more than ever. That's why I tell all of my clients to do your year-end check-in to reduce the penalty or eliminate it completely. Even if you've been underpaying all year, making a catch-up payment now can prevent more penalties from stacking up in Q4, and it shows good faith to the IRS on your account. You don't need to know how to do it yourself, you just need someone that's tracking it for you. So the smartest move, make sure you do this year-end check before the end of this year, and then going forward, make sure you calculate and plan out quarterly estimated tax payments. That way you're never stuck with a huge bill come April, and you can avoid those underpayment penalties. April is for reporting, not fixing. Your tax return is really just the receipt for what already happened. And that's what's really painful about the penalty. It's not just about the money, it's getting kind of like a late fee on a bill that you already paid, simply because you didn't pay it the way the IRS wanted you to. Compliance is easy, strategy is rare. Anyone can file, but planning is what separates high-income earners who keep more of their money versus those who let it bleed out with avoidable penalties. And here's the part that surprises a lot of high-income earners. You feel like you're doing everything right, but the real trap is believing outdated myths about taxes. I'm going to explain what 3 of those myths are and what to do instead before it costs you in the next video.